Welcome to another episode of Sovereign Property Moves. Today we have Keith James from MJ Legal. Keith, welcome to the show.
Thank you, Theekshana.
Keith, as far as I know, you are specialized in three main areas: family law, litigation, and property.
That's correct. We also do immigration and a lot of conveyancing, particularly for foreign buyers.
Right. Which one is your favorite out of the three?
Immigration and property would be my favorite, I would say, because it helps me work with a lot of people from Sri Lanka, and it's nice to work with people in the community.
Good. So we'll talk about property law today. When you are doing conveyancing and all, let's take a basic scenario: a person who is a local buying a property here. At the settlement, what happens? What are the things that you're looking at?
Certainly. So a quick overview of the process would be typically when somebody wants to buy a property, they'll be given a contract by the real estate agent.
Yeah.
And we'll take a look at that contract, see if there's anything that will restrict them from being able to purchase that or to deal with the property the way they want. And then after that, it's about managing the process of obtaining the finances, because most local buyers will have a bank loan that is using to fund the property purchase.
Yeah.
And then after that, we will assist them with the stamp duty calculation and dealing with the state revenue office on how much stamp duty they need to pay and providing the declarations, and also claiming any concessions, because there's a lot of concessions for local buyers particularly. And then from there onwards, we will do what is known as the adjustments, particularly apportioning the water rates, the council rates, and any land tax that might be on a property between the vendor and the purchaser, because those rates are usually charged for periodically and settlement might take place between that particular period. And then the last thing we do from a legal side is we assist in transferring the title of the property from the vendor's name to the purchaser's name. And we then let the land titles office, the council, and the water authority know that the new purchaser is the one that they should send the new bills to. So conveyancing is basically the process of transferring the title from the vendor's name to the purchaser's name.
Do you do a title search before the settlement to see whether the title is clear and there's no caveats or anything attached to that?
That's correct. So usually we will check the title when we get the contract as well. So before the purchaser signs it,
Right.
and then just before settlement, we will be ordering a couple of types of certificates: the title certificate, the water information certificate, the council certificate, and if there's a owner's corporation or a body corporate like in apartments, we'll order that certificates as well.
Right. When you compare a apartment, especially a strata, body corporate, versus a normal house and land, the adjustments are a bit different, right? So in apartments, you should have a buffer to pay off unpaid council rates or strata fees or whatever it is. So you have to keep a certain buffer in apartments versus...
So if anything's unpaid,
Yeah.
that's completely the vendor's responsibility.
Right. Okay.
We as conveyancers always ensure that we will get the vendor to repay that.
Right.
But the main difference between something with a strata and a standalone property is the fact that there is body corporate associated fees. So those might need to be adjusted as well in addition.
Especially if you're paying it upfront for the next year, it's
Correct.
the buyer's responsibility, I guess.
After the date of settlement,
Correct.
definitely it's the buyer's responsibility. And we usually sort that out at settlement. But you're right, there should be a buffer.
And then when you compare the local buyers versus foreign, what are the main differences when it comes to stamp duty, FIRB fees, and also anything else in the process that you're taking care of?
The main things that we see is obviously foreign buyers are restricted to buying new property, whereas local buyers can purchase any property they like. So often we will see foreign buyers buy vacant lands and build on those later. Rarely they might buy house and land packages as well. The next big difference is foreign buyers need approval called the FIRB approval, or the Foreign Investor Review Board's approval. So we'll usually guide them through that process as well. And then the last one is the stamp duty, the main variation. So local residents will pay 5.5%, particularly on investment properties or properties that are not their first home.
Yeah.
But foreign buyers will have to pay an additional 8% on top of that 5.5%.
That comes to 13.5%.
Exactly correct, yes.
And what about the FIRB fee? Is there any slabs based on the property value?
There is. So the most common slab is up to $1 million. That's about 14,800. and then it goes up for every $1 million after that.
Right. Now, recently, the government has announced certain stamp duty concessions, particularly for foreign buyers. Can you just explain the basic points on that
Yeah.
new regulation?
Definitely. So from October 2024 to October 2025, there is a stamp duty concession on any property that has a strata on it or any property that has some common ownership. So like townhouses, units or apartments, there is an off-the-plan concession that is now available to anyone, which includes locals and foreigners as well.
So that's basically a single part contract. You don't have two different contracts for the land and for the bill. As far as it's a single part, one contract, then they can get this concession.
100%. As long as it's a one part contract, they can get that concession. But the concession's only applicable to that 5.5% stamp duty.
Right.
Not the additional 8% that foreigners must pay. They still have to pay that on the entire value of the contract.
Right. So let's say if someone is buying a property worth of $1 million, they have to pay 8% on the total value of 1 million, but they get the concession only on the 5.5% local stamp duty.
Correct. And that's a huge concession because otherwise foreign purchasers are going to end up spending almost 13.5%.
Correct.
Now they just pay 8% on the $1 million.
Yeah.
And then for that 5.5%, they get a off the plan concession
Right.
for the dutiable value. That means just the value of the land.
Right.
Yeah. So you deduct the contract value on it.
Okay.
I think that's a really good incentive for foreign buyers.
So that's valid only for next 12 months.
Less than 12 months because it ends on October
Yes.
2025.
Right. Okay. So Keith, when you talk about foreigners buying commercial properties, so let's say there are different types of commercial properties like warehouses, like office spaces, and also commercial land. What are the differences when you compare these type of properties versus residential? And within those three types of commercial properties, what are the variations?
Okay, a fantastic question actually. So commercial properties actually are not majorly subject to the Foreign Investment Review Board approval. So you don't need FIRB approval as long as you're under the threshold, and the threshold is in hundreds of millions. So most of the buyers that we deal with should be okay with it. So if you're buying an established, and the other difference is you can buy a new commercial property or an established commercial property, you don't need FIRB approval. So things like warehouses, no problems, you can buy. Or even
As far as it's less than 300 million.
yes, if there is something that's more than that, I'm sure we can work on that deal separately. But a majority of buyers will be exempt.
Yeah.
But if it's a vacant commercial land, so if it's a two-part contract where you buy the vacant land first and then build a warehouse later,
Yeah.
then you need FIRB approval.
Okay, so if it is a off the plan, brand new commercial
Yes.
property, then you need FIRB.
Correct.
But if it is a established one, then you don't need.
Or a one-part contract, it's okay.
Right. Okay. So
Yes.
it's the other way around when you compare the residentials. If you do brand new or single part contract, you need the FIRB, but brand established properties you can't purchase
At all.
Right.
Yeah.
And then when it comes to land, like agricultural land and commercial land, is there any difference?
Yes, so when it comes to commercial property, there are certain industries that are designated as sensitive industries.
Okay.
And if you are purchasing in those sensitive industries like farmland, then you will need FIRB approval. But the one main benefit of the commercial purchase Theekshana is no additional 8% stamp duty. So you just pay the standard 5.5,
Right.
the local stamp duty.
Any commercial property, you are paying local stamp duty.
Correct. There is no additional foreign purchaser stamp duty, which
Right.
is a good benefit as well.
So is there any restrictions if you're buying a commercial property, if it is attached to a certain industry, sensitive industry, or let's say like close to military facilities, or like any sensitive
utilities.
area, utilities? Is there restriction?
Yeah, definitely. So if you are buying in an industry that is considered a sensitive industry like land that is adjacent to Australian Defence Force installations,
Yeah.
or any type of utility providers like
Right.
chemical plants and stuff, then you need FIRB approval.
Right.
They may approve it depending on the case that you provide, but you need approval. But if you're buying standard warehouses or other land like storage land and stuff, that's okay. You can buy it.
Right. Okay. And one of the very uh, frequently asked question is when someone
Acquires.
acquires property here in Australia, residential or commercial, can they get PR?
Yeah, that's a very good question, and I get it all the time as well.
Yeah.
So there are actually two things.
Yeah.
Buying a property, residential or commercial, has to be purely an investment decision.
Yeah.
Permanent residency is a completely separate consideration, and we can't tie the two together.
Right. Okay.
So typically, if you want PR, you have to seek it through the normal routes.
Okay.
But if you buy a property, I think the best case you can use is to get a visitor visa, but nothing further than that. Unless you're buying a business, then it's a different story.
Right. Okay. So when you're talking about getting the PR here, is there any pathways through property investment like significant investor visa, or is there any way that you can invest or put a certain amount here in treasury bonds or whatever it is and get the PR?
There used to be Theekshana, but since the 1st of July, they've removed those pathways, unfortunately.
Right.
So now the only way for a high net worth individual to consider moving to Australia is potentially to acquire a business and have that business sponsor them to come to Australia on an employer sponsored visa.
Right.
You can't, back in the day, you could have just parked money in some type of investment and gotten a visa through that, but not anymore.
What about this new visa scheme called Global Innovation Visa?
It's still to be implemented,
Okay.
and there is going to be a pathway for innovative entrepreneurs to come through that. We don't have a lot of details on it yet, but that might be something to look for. But it will be more for people running like innovative companies, like tech companies and stuff, rather than established investors with large pools of cash.
Right. Okay. One last question, Keith. Now, a lot of investors, they sometimes buy the properties under their names, and then later on they want to transfer it to their kids' name. So when you do that, you have to pay stamp duty again, if I'm correct.
That's very correct. Yes, every time a transfer is effected, you must pay stamp duty.
Yeah. So what happens? They buy it under their name, and you draft a last will, giving those properties to your kids. In that case, do you have to pay stamp duty?
No, in Victoria, there is no death tax. So as long as the asset is getting transferred after the investor's demise, and you are going through the Supreme Court probate process, then we can get a stamp duty exemption. But it'll only be after their demise, not during their lifetime. They can't use it.
Yes. And then if you purchase a property with a local, right? So let's say 50% ownership is with the local person, 50% with the foreigner. How does the stamp duty works and FIRB works?
You still need FIRB for the foreign purchaser.
Right.
So any time a foreign purchaser acquires residential land, they must be approved.
Right. Okay.
But as far as the stamp duty is concerned, the local purchaser will pay stamp duty that's applicable to them, which is the 5.5%. So if they own 50%, they'll pay on that 50%, and you pay stamp duty on your interest in the land. So if it's 50%, you pay it at your rate, which is 13.5%.
Right. And then the same rule applies if you do that through a company or a family trust?
Correct. Yes. The rules will be whatever is the foreign purchaser's interest in a particular entity is what the foreign purchaser needs to do. But FIRB, there are some concessions if your holding in the company is less than a certain percentage.
Right. So let's say the local buyer, the local person in a company has majority shares. The foreigner has very minority shares. In that case, also you have to get the FIRB.
There's a threshold. I think it's 20%. I don't have it off the top of my head.
Okay. Yeah.
But if it's less than that threshold, then you don't need.
But the stamp duty will apply for the foreign buyer.
Yeah, because
the foreign rate.
Because FIRB is a federal law, and stamp duty is a local, like a Victoria state law.
Right.
So then you have to pay. The state law requires you to pay stamp duty on any of your interest in a land.
Right. And also, Keith, what is the difference if someone is buying a property under a company, forming a company, buying a property under that company versus through a trust?
Well, the main reason that we use trust structures are for two reasons. Usually, it's a asset protection strategy. So, assets in a trust are typically not exposed to events of litigation. For example, if somebody sues you,
Yeah.
they can't really claim assets that are held in the trust.
Right.
They sue the company. So that's one asset protection strategy. And the second strategy is when it comes to tax and distributions of income you make. So if you have a rental income coming in, you can distribute the income to all of the beneficiaries under the trust.
Right.
So
whereas in a company, you have to pay 30% from the first dollar.
that's correct, yes.
Right. And then in a trust, you can remove or add beneficiaries at any time.
You can change beneficial interest in a trust, yes.
Right. Okay. All right, Keith. I think we covered all the topics, especially when it comes to foreign buyers and also property law. So thank you very much joining this session. And you're going back to Sri Lanka, so I'll wish you all the best and safe travels.
Thank you, Theekshana. Pleasure being here.